Once again, I welcome you in the another episode of Accountancy. Today we are going to continue with basic accounting terms. So left out points today we are going to study. Okay. The first point is bad debts. What is bad debts? Bad debt is an account in which irrecoverable amounts are transferred. The amount which is irrecoverable, after trying a lot, if we come to know that this amount is difficult to recover, until date not recovered, that amount has to be transferred in bad debt accounts. For this purpose only, bad debt account opened. Next is balance sheet. Balance sheet is not an account, it's a statement. It has twofold. In first side, we have to record liabilities, and the second side, we have to record the assets. So balance sheet gives the complete information about the total asset and total liabilities of a firm. You're getting the point? So balance sheet is not an account, it's a statement. Next is book value. Book value means the amount which is stated in the book. The amount which is stated in the book, which is mentioned in the book, that is called book value. You're getting the point? The amount which is recorded in the book. For example, machinery rupees 10,000. If 10,000 recorded in the book against machinery, you're getting the point? That 10,000 is known as book value. According to the book, whatever the value recorded, so that is called book value. Next, books of accounts. Whatever the supporting books needed in order to maintain the total account. For example, in order to prepare a complete account, we need to take the help of many supporting books. For example, cash book, purchase book, sales return book, purchase return. So there are so many books are there. So we need these all books, then only we can able to prepare a complete accounts. You're getting point? So this is called books of all supporting book is known as books of accounts. Next, cost of goods sold. Cost of goods sold means while producing a goods, after adding the direct expenses, whatever the price per unit comes, that is called cost of goods. You're getting point? After adding direct expenses, whatever the cost per unit comes, that is called cost of goods sold. Clear? Next is credit and debit. Next is credit and debit. Account has two sides. Basically, the first side we often call it as a debit, and the second side we often call it as a credit. You're getting point? So first side debit, second side credit. So every account has two folds, debit fold and the credit fold. Depreciation. When the reduced value happens in tangible asset, when the value of tangible asset is reduced due to its usage or due to the span of time. You're getting point? As the time passes, then also the value of tangible assets reduces, or when we use continuously, its value decreases. Whatever the value decreased on tangible asset, that is called depreciation. Clear? Next is entity. Next is entity. Entity means existence. Existence. The business should exist. If you are maintaining account for a business, that business should exist. You're getting point? And we have to treat owner and business as a separate identity should be given. We have to treat owner as a separate and business as a separate. Both are having different identity, different existence. So this is called entity. Both should be treated separately. You're getting point? Next is entry. The process of writing in a journal book, the process of recording in a journal book is known as entry. The style of recording in a journal is known as entry. Then is insolvent. Insolvent means the person who is unable to pay off his debt, who declare himself that he is not able to pay off his debt, we call him as a insolvent person. And what is solvent person? Opposite of insolvent, that is solvent person. The person who is able to pay all his debt timely, that is called solvent person. Clear? Next is amortization. Amortization means when the value of intangible asset decreases. That is called amortization. For example, the value of goodwill decreases when the value of patent decreases, when the value of copyright decreases. That decreased value is known as amortization. So when the value of intangible asset decreases, that is called amortization. Next is proprietor. Proprietor means it's a basic term. It's a very simple to understand. Proprietor means the owner of a business. The owner of a business, we often call it as a proprietor. Next is rebate. Rebate is just like a discount but not like a discount. You're getting point? But not taken as a discount. This offer is given by the seller in order to clear the old stock, in order to clear the stock, or if the seller feel that goods are not having demand. So in order to clear those stock, they offer this kind of offer to the customer. By seeing this offer, customer will come and buy the stock. In this way, business clears its stock. Clears its stock. So this is called rebate. And the next one is double entry system and single entry system. See, what we are following in India and what we have to study in accountancy, okay, that is totally based on double entry system. Double entry system is treated as a universal system. You're getting point? It's a universal applicable system. What we study here, same thing is studied by the students of other countries, globe-wise. So its principle is universal, applicable universally. So why it is called double entry system? Because every transaction has how many effects? 2 effects. Every transaction gives at least 2 effects. One is debit and the another one is credit. And we are following which system? Double entry system. We have to follow double entry system. Okay? So our accounting system is totally related with double entry system. Double entry system is treated as the complete system of accounting. You're getting the point? Whereas single system, as it has only one effect, that's why it is treated as incomplete system. As it is incomplete system, it doesn't give complete information to the user. You getting point? So this all about basic terms of accounting. So by this we are going to wind this second chapter. Please do subscribe and press bell icon. See you in next episode.